Now, 2024 could be an historic year for cryptocurrencies as we see a deadline looming for the SEC to decide on a spot Bitcoin BTF application, multiple really. And joining us with an outlook for the crypto industry in the new year is Samir Kerbage, CIO of Hashdex. Pardon me. Now, this company, your company, recently released its crypto investment outlook for the new year. Walk us through this. This actually talks about a new regime being ushered in, and tell me what does that look like?
Okay, Renita, it's great to be here. So we released this outlook a couple of weeks ago, and the real goal was to outline what we're seeing in the crypto asset landscape. And when we look at the Bitcoin specifically, we have three major topics that are going to dominate the narrative next year. The first one, everyone's talking about this already, is the institutional phase of Bitcoin. And it's very represented by the potential approval and launch of Bitcoin ETFs in the US. That's going to open up a huge on-ramp for something like 80% of the US wealth management market that currently doesn't have a way to access Bitcoin in their traditional brokerage account. And if together with that, you have the Bitcoin halving coming early next year. So probably in April or May of next year, we're going to have like an event where basically the inflation rate of the supply of Bitcoin, the issuance of Bitcoin drops by half. That happens every 4 years. Historically, this has been very positive for price action on Bitcoin. And we also have the macro tailwinds, right? So we're seeing now the possibility of the Fed dropping interest rates starting in the next few weeks. So if you get all those factors combined, we are very optimistic about what could happen with Bitcoin next year. We will have possibly a demand shock with a Bitcoin ETF being available in the US and a supply shock with the issuance of Bitcoin dropping by half, all in an environment that's going to be favorable for risk assets. So the macro tailwinds are going to be favorable. So like we couldn't be more optimistic about this. That tends to change. We talk about the regime shift on crypto overall because this is a new phase for Bitcoin. This is when we leave the speculation or the more like retail-driven demand to institutional-driven demand. That's going to change completely how Bitcoin prices behave. That might have a big impact on Bitcoin's volatility, on the market infrastructure around Bitcoin, because players will want to interact with the regulated products that are being offered out there. So we tend to be this as a regime shift in Bitcoin. And when you look at the other crypto assets, we're also very positive about this because when you look at blockchain space and smart contract platforms, we're seeing regulatory clarity basically all around the world. Like countries are regulating intermediaries and are regulating this technology in a way that looks like it's going to incentivize adoption and innovation. We're seeing scalability solutions starting to reach critical mass. And we're seeing like basically most of the financial institutions globally exploring use cases for tokenization. So that set us a big environment for smart contract platforms and for crypto applications looking forward. So overall, we couldn't be more optimistic about the crypto landscape, both from Bitcoin, but also in the other crypto assets like smart contract platforms.
Thank you so much for walking us through that Hashdex report. That is some really interesting info, and it gave us a lot more insight into it. But I want to dig a little bit deeper into this very, I don't know, rogue asset becoming institutionalized, right? So what role do you see institutional investment playing in this space? You did give us a little bit more. Can you give us a little bit more insight into what you think it may do, though?
Sure. So like the investment thesis that we have for Bitcoin is that it can be a good store of value, right? So right now our thesis is that it is of Bitcoin as an emerging store of value. This means that it has great characteristics of being an alternative to gold or to other assets that we've been traditionally using to store value over time, but it's still very nascent. And there's not a consensus on whether Bitcoin can serve the society as a good store of value. And this institutional phase of Bitcoin can cause this transition from a non-consensus alternative as a store of value to a consensus alternative in store of value. So that's why this can be very significant for our investment thesis on Bitcoin. Investors should be looking into Bitcoin as a way to diversify their long-term investment. So it's a small allocation for the long run, and we see this as an alternative to gold. So you should look at your allocation to store of wealth and basically have a small allocation to Bitcoin. That's how we see that institutional investors are looking into, and most importantly, the financial advisory industry, the community is looking at Bitcoin as a way to diversify the store of value investment thesis.
I got to push back just a little bit about that, because one of the main arguments against Bitcoin as a store of value is because of how volatile it is, and also because it does not have a physically backed asset. But I'm guessing, does the introduction of a Bitcoin ETF create more of a tangible feel for this cryptocurrency to support that thought?
Yeah, so starting with the second one, I think that's the big resistance. Bitcoin doesn't have a physical representation you can use, and that's very hard especially for the current generation that is currently adopting a store of value. Like you look at the boomers and all the generation that didn't see the internet growing or didn't is not digital native. It's very hard to understand or to accept a store of value that has no physical representation. And we believe that over time, there's going to be a generational shift in our society. This is already happening. This newer generation is digital native. For this generation, it's not a big deal not having a physical representation. So we think that over time, this is going to be sorted out. A Bitcoin ETF helps that because it gives a way for traditional investors to hold and a Bitcoin investment without having to go through all the digital rails and having to set up a whole new back office infrastructure to hold Bitcoin. So we believe this is very positive. And on the volatility side, what we believe is going to happen is as Bitcoin transitions from a non-consensus store of value to a consensus store of value, this volatility will go down naturally. So if you zoom over the last decade, volatility has been going down, and we believe going to be a regime shift that's going to take Bitcoin prices to another levels, but also can make the volatility go down significantly.
All right, Samir, I don't know how the gold bugs feel about that, but we will keep our eyes on it. Thank you so much for joining us, Samir Kerbage of Hashdex.